Hey everyone, it is Crypto Wendy O.
What's up, everyone? I'm Bagsy, and welcome to What is Crypto?
Thank you for listening to the What is Crypto podcast.
What is going on, everybody, and welcome to another episode of the What is Crypto podcast. Today, we are talking about trading. We're going to discuss the different aspects of what it means to be a trader and all the different styles that you can trade with. In this episode, I actually have two very special guests with me. One, because they're amazing people, and two, because they're great friends of mine. The first is
Crypto Wendy O, founder at Beyond Associates.
Wendy is a full-time trader and shares a lot of awesome perspectives in this episode about how to trade and what you should know about trading in general. The second guest I have is
Bagsy, cryptocurrency trader, investor, speculator.
Bagsy is an anonymous character online and a really cool person in real life as well. He is famous for wearing a mask on Twitter and doing a lot of really cool live streams and charts for people who want to learn about how to do a technical analysis. So with both of these guys, we're going to dive in a little bit about how to do some TA, as well as the very, very basics around trading and what you should know coming into cryptocurrency if you want to be a trader. Again, guys, this is not financial advice. None of us are financial advisors. We are simply here just sharing content for education and entertainment purposes only. If you got any questions for Bagsy, Wendy, or myself, you can join us on Twitter or in the Facebook group. All of those links are at whatiscrypto.com. Enjoy. We're going to start off, we're talking about trading. So let's just start off by discussing what is an exchange? Like, what does it do and how does it work?
So an exchange is pretty basic. So the term exchange is one in itself. So it's a place that you go online to where you can kind of deposit your crypto or deposit your money, and you can purchase other cryptocurrencies. And you can kind of decide if you want to hold those cryptocurrencies or if you want to trade them.
What's some of your favorite exchanges that you use?
To be frank, I don't have one. I think if you're, well, not I think, I know if you have a bigger bankroll, you'd probably want to be trading on BitMEX just because of liquidity. You're not going to be trading 1,000 Bitcoin position on some small obscure exchange. So I think BitMEX is the main one. And there are some competitors coming up in the space like Bybit, FTX.com. And I use all of these, but the first one that still comes to mind is BitMEX.
Unfortunately, a lot of my favorite exchanges are dying. We saw Cryptopia die. We are seeing Coin Exchange die. Binance is still alive and kicking, but they've kind of kicked out a lot of US users. So right now I'm using Bybit, I'm using Bittrex, I'm using KuCoin, and I'm using Voyager right now to buy Bitcoin and crypto when I need it. I'm using Gemini, and I want to start using SwitchDex, which is an actual decentralized exchange.
What's the difference between a centralized exchange and a decentralized exchange?
So when I hear the word centralized, it reminds me of multiple parties. It reminds me of the aspect of being controlled. So a centralized exchange is, I want to kind of compare it similar to a bank. You go in, you kind of deposit your money, somebody else is kind of dealing it with you. Obviously, crypto exchanges are a little bit different than banks, but when I'm talking to a regular person or to other soccer moms, that's the way I like to describe it. And a decentralized exchange, there's no middleman. It's just P2P. It's strictly from point A to point B.
And what's an order book?
Basically, it's a list of buy and sell orders that allow the user of an exchange to see what's going on, to see who's buying, selling, what's available. So it's a visual way for someone to get in and out of a market.
Inside of the order book, what are some different terms mean, like spread and slippage and things like that?
So a lot of people use order books to trade. I try not to pay too much attention to them because especially when you're trading, when you're margin trading, there's a lot of noise that goes on in these order books. There's bots, there's all kinds of things. But basically an order book kind of tells you what is being bought, the amount of crypto that's being bought or sold and what quantity and all that different type of stuff.
Cool. And what is slippage? What does that even mean?
I want to say I don't like that term because it just sounds very confusing. But basically, it's like when you set an order and it kind of misses it and it kind of falls through, it kind of slips through because the order books are really thin. And when I say the order books are really thin, is there's not a lot of liquidity. And when I say the word liquidity, I mean there's not a lot of, I guess, money that's provided on the order book.
And there's so many different styles of trading. You know, there's day trading, there's swing trading, which is a little bit longer time frame, and then there's hodling, right? Trying to catch the markets in broader movements, if even catching the markets at all. What's kind of your strategy, and how would you kind of explain each of those?
So my strategy, it kind of varies depending on what my workload is. I do work in crypto, I do media in crypto, I do marketing consulting for companies, and I'm married with a young child. I have a 3-year-old daughter. So my strategy changes. When I first got into crypto, I was like, I want to be a trader. This is awesome. Like I can be a stay-at-home mom, I can do this. So I was trading more. But then when I started kind of branching out and taking advantage of these other opportunities that were present and putting in the work, I stopped trading. I was still trading, but my trading is a lot less. So first and foremost, there's swing trading, and that's longer time frame trading. So let's say you think that Bitcoin is going to go to 5K. You would place bids around at 5K, and then you think it's going to kind of go up after that. Then you would kind of place sell bids at like 10K to kind of make money. Day trading is when you kind of go through coin market cap, or you have some select cryptocurrencies that you like to trade, and you kind of look for setups and you kind of scour for setups. Day trading is a lot harder because it takes a lot of time, it takes a lot of patience, and as much as I would like to day trade, I don't always have time to do it, especially with a 3-year-old running around. And also, day trading can involve scalping, and scalping is a lot harder to do because you're dealing with these shorter time frames. And especially when you have a child that's running around saying, Mom, I need peanut butter and berries, you definitely can miss some setups. That happened to me this weekend. And hodling is really just DCAing, which is dollar cost averaging, buying, like $20 of Bitcoin a week or $20 of Ethereum or whatever it is you want to buy, and just kind of stacking, not really paying attention to price, and just buying every week at the same time, and just kind of holding on to it in anticipation that price will go up. All of those methods are investing. Investing is always risky, and there's always a risk associated with it. And you're not always guaranteed to make your money back just because you purchased crypto.
What's the difference between just normal trading and leverage trading?
Well, normal trading, you're using your money. Leverage trading, you're leveraging other people's money, meaning that it's a very slippery slope if you don't understand what you're doing, if you don't understand what a stop loss is, if you're risking too much of your capital. And these are all mistakes that I made when I started out. So we can definitely talk a bit about leverage if you want. I know a lot of people find it attractive because it's like, man, I could do 100x leverage, and I could turn my one Bitcoin and make 100 Bitcoin position, and I'm gonna make all this money. I'm like, man, dude, breathe. Like, you got to understand risk management first. Yeah, leverage is scary to those who aren't initiated to it.
Yeah, I agree, man. And I think it's important, exactly what you said. You have to understand risk management first. Can you chat a little bit about that? Like, what is risk management? What does it even mean?
Risk management, it's managing your risk, managing how much money you can potentially lose in a trade versus how much you can potentially make. And the books would tell you, do not risk more than 2% per trade. And there are many ways to spin it. Personally, how I did it is I start with, let's say, a 2% risk, meaning let's say my whole portfolio is worth $100. At most, I'll lose $2, which is 2%. Now, if I lose that trade, the following trade, I'm going to reduce my risk to 1%, meaning $1. And if I lose that trade, 0.5%. And I'll keep dividing by 2 until I start winning. Because a big problem is, let's say you're good at risk management. I will only risk 1% per trade, but you take 100 bad trades in a row, you're going to be devastated. So what I did was pretty smart, and I didn't come up with it, obviously, but it helped me stay alive when I was still learning the ropes. And what someone could do if they don't want to use real money is paper trade.
So paper trading is you find a crypto or a stock that you want to trade. You go ahead and you look at all the different time frames. You write down your setup. You write down why you think it's going to be bullish or bearish. You write your entry, your stop, your target, all that type of stuff. And then you go ahead and you write all that stuff down, the price you would enter, and then you kind of watch it play out. And then you're not actually entering into a trade. You're just kind of watching. And then you can kind of track and keep log of your success, your wins and your losses. And that's a good way to actually start trading, because then you can start identifying what your strengths and your weaknesses are. Of course, there's a saying that you need to actually have skin in the game to actually trade, which is true. A lot of people will argue that you need to do it, and some people say you don't need to do it. But I think that once you feel confident enough after you started paper trading, it's good to then start getting your feet wet and then start investing a little bit of money. And when I say the term investing, I'm talking about putting money into a trade that if you lose it, that you're okay with it. It's not your rent money. It's not your grocery money. It's not your kids' daycare money. It's none of that stuff. It's money that you want to invest that you can actually lose.
I've never done that myself personally. Some people swear by it. I personally don't think it's a good idea. I'd rather lose my money and learn a lesson rather than losing fictitious money and being like, okay, I think I'm ready. But yeah,
I like that. Why do you think that's not like an effective method?
it's just not real. You're not in the trade. Psychologically, you're not invested. I find that whenever you have real money into something, it means more to you.
Yeah, there's no skin in the game.
Exactly. Yeah. So whether it's paper trading or not, some incredibly talented and good traders started out that way. So it's really up to you. If it were up to me, I'd start with a very small percent of my total assets. So let's say I own whatever 10 Bitcoin. I would start trading with only one Bitcoin. And from that one Bitcoin, I'd be risking, let's say, 2% or 1% to start. So that other 9 Bitcoin would be in cold storage, locked up in, some vault. And the other 1 Bitcoin, that's what I'm playing with. This is going to be my test amount to see what I can do and to see if I even like it. I mean, I'd have to say, like, you have to be a certain kind of individual to really enjoy trading and to really put insane focus to it. It's not for everyone.
A lot of trades are not winning trades. Trading is hard. It's very complex. There's a lot of factors. There's a lot of steps that goes into it. And if you are not feeling well, or if you're tired, or if you're hungry, or you're looking at other people's charts on crypto Twitter, all that type of stuff can kind of impact your trading. And at the end of the day, you want to make money. You don't want to lose money.
I want to give a shout out to one of our sponsors, AAX. AAX is a futures trading exchange that has more than your average capabilities. They allow you to do spot, futures, and OTC for low fees on a highly secured trading platform. Highly qualified team that is focused on creating the world's best financial technologies and tools to allow for digital assets to be traded with simplicity and ease. AAX is one of the world's first digital asset exchanges powered by the LSEG. And the LSEG is the London Stock Exchange Group. Leveraging the LSEG's proven and robust and scalable technology, AAX provides institutional-grade exchange performance and reliability. You guys can learn more at AAX.com. I want to give a shout out to our sponsor, and our sponsor is UnityCoin, the world's first stablecoin diversified to provide you with financial freedom and help the world via giving back through charity donations. The UnityCoin is a stablecoin pegged to a diversified index of assets for financial security against a volatile market. While national currencies are inflationary and cryptocurrencies can be volatile, growth and stability come from automated diversification. UnityCoin aims at giving and delivering this automated diversification on a daily basis. One of the really cool things about Unity is it's a non-profit organization. All revenue after costs are donated to vetted projects. This company is really focused on using cryptocurrency and using their business model to give back to the community and beyond. And what's even cooler is that if you hold UnityCoin, you can have a vote on where that money is donated. You can go over to unity.sg to download their wallet, to look at historical data, and to become involved in the Unity project. And let's talk about the basics here, because there's going to be a lot of people on the next wave that are going to tune into the podcast. They're going to look at, say, oh, what is trading? And they're going to want to learn. What's some good thoughts, some good opinions? What's a good recommendation for someone that has maybe no experience with trading and specifically has little to no experience with the crypto market? What would you recommend them do?
So when I first got into cryptocurrency, I wanted to get into stocks and kind of trade those prior to that. But when I first started looking into stocks, I was very very intimidated. I was nervous. I was scared. I grew up very poor. I never thought that I would have any sort of money or anything like that. And I don't have a lot of money, but I kind of felt like because I was part of the lower class, I wouldn't be able to trade stocks because I felt that that was what rich people did. And I never in a million years thought I was rich. And again, I'm not rich. I just didn't really have high expectations or goals for myself because I didn't know. So I didn't understand what stocks were. And I thought they were only for rich people. But when I got into crypto and I understood and I learned that you could buy a portion of a Bitcoin, like if I only had $20 to invest, I can go and I could buy $20 of Bitcoin and then I can kind of start, trading that. So from what I've heard, Forex is very different. Forex and stocks is very different than crypto because our market is a lot more volatile. What I like to recommend to people and the way that I started learning, and I've been made fun of for this, and I don't care because that's how I learned. But I went on eBay. I bought two used books. One was The Idiot's Guide to Technical Analysis, and the other one was The Dummy's Guide to Candlestick Charting. So I went ahead and I started reading those. And I also looked at Bitcoin every day. I went on TradingView and I looked at Bitcoin price action and charted Bitcoin every single day until I started to feel a little bit more comfortable. And I practiced drawing charts. And then the great thing about TradingView and some of these trading platforms is you can kind of go and see other people's work and you can see what they were doing. So you can kind of compare your work, essentially paper trades, because obviously, you want to kind of compare your work to other people. And then once you feel confident enough, you can actually get on an exchange and start trading. So paper trading. Paper trading is you find a crypto or a stock that you want to trade. You go ahead and you look at all the different time frames. You write down your setup. You write down why you think it's going to be bullish or bearish. You write your entry, your stop, your target, all that type of stuff. And then you go ahead and you write all that stuff down, the price you would enter, and then you kind of watch it play out. And then you're not actually entering into a trade. You're just kind of watching. And then you can kind of track and keep log of your success, your wins and your losses. And that's a good way to actually start trading because then you can start identifying what your strengths and your weaknesses are. Of course, there's a saying that you need to actually have skin in the game to actually trade, which is true. A lot of people will argue that you need to do it, and some people say you don't need to do it. But I think that once you feel confident enough after you started paper trading, it's good to then start getting your feet wet and then start investing a little bit of money. And when I say the term investing, I'm talking about in putting money into a trade that if you lose it, that you're okay with it. It's not your rent money. It's not your grocery money. It's not your kids' daycare money. It's none of that stuff. It's money that you want to invest that you can actually lose. And that way it kind of takes out some of the emotions and takes out some of the feels if you do lose, because a lot of trades are not winning trades. Trading is hard. It's very complex. There's a lot of factors. There's a lot of steps that goes into it. And if you are not feeling well, or if you're tired, or if you're hungry, or you're looking at other people's charts on crypto Twitter, all that type of stuff can kind of impact your trading. And at the end of the day, you want to make money. You don't want to lose money.
How did you pick your style? Like, how can someone coming into crypto right now, learning about the basics, investing maybe in Bitcoin, how can they know which one they're good at so that they don't just blow all their money right off the top of the bat?
Trial and error. There's really no better way. I mean, maybe if you know your personality type, you can kind of figure it out. And also, I mean, if you're a scalper, you're going to be in front of a computer screen for days on end. And scalpers, I really enjoy it. So if you're that type of person and you're absorbed like it, kind of like a salsa tequila, for example, this guy is always scalping every day. You'll quickly find out if you're that type of person versus someone who swing trades. You're building a position over a couple weeks, and that's kind of more what I like to do. I don't know why yet, but I found I'm most profitable that way, so I'm kind of sticking to that.
I want to talk a little bit about staying safe in the crypto space, right? You come into crypto, you join crypto Twitter, crypto Facebook, you have all this noise with people who have completely different strategies, and even with people that are asking you for money to trade for you, asking you for money to join their paid group, yelling at you how you're wrong about your analysis. How can someone new coming in stay safe, stay smart? while still navigating this community?
First thing I'd say is listen to the What is Crypto podcast.
Boom.
Secondly, I'd have to say, don't listen to anyone. Move slow. I would say, look at the people I'm following on Twitter, but then again, that could mean nothing. But don't trust anyone. And I hate to say don't trust anyone because eventually you have to, right? But at least when you're starting out, just move slow. There are so many good and bad actors in the space that you really don't want to be trusting anyone with your money. And it's the same about trading. Don't go sending your money to, Joe Schmo Trader 123 because he's like, I made 100% this month. Let me do it for you. Usually if it's too good to be true, it is that way for a reason. So I'd have to say that just move slow and be careful where you get your information from.
How does working with a community and not even working with, how does being a part of a community like Crypto Twitter influence your trading? And what are some do's and don'ts of being a part of that kind of community?
So this might piss some people off because I'm gonna be very honest and straightforward about it. So when I first started trading, I put myself out there as like, I'm new, this is what I want to do. And I started posting my charts and people liked it. Like a lot, like some of the accounts which give me shout outs and they were like impressed that I learned so fast and whatnot. So then I went ahead and I started hosting meetups. And they were always free. And the intention of these meetups was all of us kind of collectively sitting down together, just talking about TA. Like I would talk about like, simple indicators like RSI, MACD, stochastic, Bollinger Band, support and resistance. And I would have people that were mostly crypto hodlers come in and they wanted to kind of learn the basics of trading. So I went ahead and I did these meetups. Well, I always was honest. I was always stating that I was brand new and the purpose of this and me posting content was for me to learn. Well, crypto Twitter didn't like that. And after a while, and a lot of the OGs, all the dudes, they started calling me out and said that I don't trade, I don't know what I'm doing, and that I'm an idiot and all that type of stuff. So if you're a dude in crypto Twitter or you're an anonymous girl, that is awesome. Become friends with some of the traders, DM them, talk to them. A lot of them have like open groups. I'm not talking about the paid groups, but open groups. It's always good to have a big group of traders that you can kind of talk to and you can bounce ideas off. But for me, I wasn't really given that opportunity with most of the community because I don't know if it was because I'm a woman or not, but a lot of them just did not like me and thought that I was LARPing or doing whatever. So I do keep a lot of my trades and whatnot to myself. I post charts, I post content. If people have questions, I'll always answer. But I like to keep most of my trades and a lot of my stuff private just because it does stress me out and it does affect my psyche when I have people that are kind of knocking the way I make money and knocking the indicators I use or the methods that I use.
And how should people navigate paid groups specifically, right? As a beginner coming into the space, you get on Twitter, even you get on crypto Facebook, and people are saying, join my pay group. Look at this 400% gain that I made in the last 3 days. We do this every week. What's a good tool to recognize whether it's legit or bullshit, or should they just avoid it altogether?
So me personally, I know people that have paid groups that are very honest people. They don't charge a lot of money and they don't promise crazy gains. They're not really giving signals either. Most of it is more education. In crypto, especially crypto, if something sounds too good to be true, it is not true. I've been asked to join paid groups as far as providing my TA and whatnot, and I've always turned it down. It was not something I felt comfortable with. I have my YouTube channel where I go ahead and I give free information out and I answer basic questions, and I'll always do that. But as far as charging somebody for knowledge that you can get for free on the internet, I get people need to get compensated and be paid for their time. And I respect that. But at the end of the day, if somebody's charging you more than like $100 a month to kind of learn TA or kind of, to be part of their paid group with these massive crazy gains, it's just a bunch of bullshit. It's not true. It's not something that I would trust. And also too, you guys have to understand, and I did a mom tips video about this, about paid groups. Like, if somebody is on Twitter or on the internet, they are not showing their face, they are anonymous. The chances of them having a business license or actually paying taxes or doing everything on the up and up and legitimately, they're probably not doing that. So the chances of them exit scamming, it's probably going to happen. So if you want to join a paid group, that's fine, that's on you. But I don't know, I'm just really not that big of a fan of paid groups because I feel like you could get a lot of that education on your own and you can start a group with your trading buddies and kind of, shoot the shit and talk about stuff. But a lot of these paid groups, they are scams. There are some that are great and they're good and they don't charge a lot. And if you're, if you want to pay $100 a month to learn and do whatever, then that's fine, or be part of a community, that's cool. But if someone's going to charge you like $1,000 a month, then it's probably a pump and dump group and it's probably a scam.
Yeah, and I think people also got to recognize that most paid groups is scammy, not in the sense of them trying to teach you things, because most paid groups don't even try to teach you things. If you find a group that's literally only about education, I'm not gonna say it's good, but it has better potential than something like we've seen in the past with Coin Signals, who was
Mhm.
literally just saying, "Hey, give me your money, I'll manage it for you." I think that's
Yeah, no.
the free exactly. I think the first thing that everybody needs to recognize is like never just give anyone your money to manage. They're not going to do it. And if they say they're going to do it, they're probably wanting to scam you.
Well, I know crypto investment firms, and they're licensed by the SEC. They're licensed by the state of California. Like they're legitimate entities. They have licenses. They pay their taxes. They do things on the up and up, and they're more managing like 401ks and like, but with cryptocurrency and doing that type of stuff. I'm all for that, because if shit hits the fan with that, you can go after them. You have legal recourse. But if you are giving your money to some random person on the internet that is letting you have access to their trading journal or to their paid group that's promising like all these crazy gains, and there's something that's not right there, because trading is hard, investing is hard, it's not easy. There's months like this weekend I had 3 losing trades in a row. Like, trading is not easy. Nobody is ever 10 out of 10. So I don't know. I always tell people, do not give people money on the internet. There's a saying, like if you loan a friend or family money, you expect to never get it back. And that's the same thing. You're giving somebody money in anticipation for you to actually get more back. And it's not going to happen. And you're going to end up with a big L.
Agreed, 100%. Bagsy, tell us a little bit about your trading strategy specifically. Like, what do you do in terms of do you invest 20% in every coin you invest in, or every trade you make? Like, what's the percentage you do? And also talk to us a little bit about what's your withdrawal process look like? How do you know, like, do you take a 5% every time you win a trade and move it to cash? What's your whole
Right.
setup
Well,
like?
I got my guy Jimmy. Every month we meet up. He gives me cash. I give him crypto, and that's that. So basically, I don't pay any fees for my withdrawal, and depending on the amount, sometimes you can negotiate where you're actually making a bit of money. But that's like how I get in and out. I've always done cash just because I don't know, it's it's part of my personality. I've never needed to cash out through an exchange, and I never want to compromise my bank accounts, because in Canada they're very or at least they were very strict on any type of banking transaction involving cryptocurrency. And I know you've had a couple issues as well, so that's why I kind of always stuck to that. And my trading strategy, basically, I'm almost always holding a majority in Bitcoin. I prefer trading setups where there's actually a fundamental reason to take the trade. So in prior examples, let's say a large cryptocurrency that has an upcoming event in a month, and big speakers are at that event, and I'm watching the chart. I'm like, okay, I think people are accumulating here. I'll slowly start entering there a month or two prior and swing trade into the event. To me, that's been my most profitable trade, where there's a real reason why I'm buying, why people are buying. The trick is just noticing it before everyone else does, and hopefully you being right. And so far that's worked out for me. But in terms of risk percentage, I'd rather not give out those numbers, because it's more than I'd advise anyone, and that's just because I'm comfortable with losing in order to win. The bets I'm making, I think, are smart. Obviously I don't win every trade. It's impossible. I've found that when I have a fundamental reason to take the trade, it typically works out well, and I don't have to, go day trade scalping on BitMEX and, getting fucked by whales left and right.
And the final question I have is, I think people need to be aware of taxes when they're trading. There's a lot of things that people don't even realize when they first get into crypto, especially in the trading realm. How would you recommend people deal with and handle taxes? Do you have specific software you use, or a specific method to tracking your trades? What's your opinion on all that?
Like I said in the beginning of the show, I have a company, like a marketing consulting company. It's called Beyond Associates. I get paid in crypto to provide services, to plan events, to do different things for companies. So I keep track of all that stuff, and I pay taxes on my stuff. I pay taxes on my trades. So I was hired by a company called Acquainting to do some tweets and to do some content for them. And I'm no longer working with them. The campaign had ended, but they're a software that I actually do recommend to people. They have a free version, and then they have a one where you have to pay. I think it's like $200 to where you basically, with this software, you basically plug in all your API keys, your exchange addresses, or like everything, your ledger addresses, and it automatically calculates everything for you. So when you go to file your taxes, you can just hand these documents over to your CPA or your tax professional, and they take care of it for you. Me personally, I pay a CPA to deal with my crypto taxes, especially with my company. Me and my husband, we file together, and he's got his own company as well. So we just kind of pay for everything to be done. I know some people like to do their taxes themselves, but because it is cryptocurrency, and if you're making any type of money in crypto, then I suggest paying somebody and hiring somebody to do that. Because if something happens, if you get in trouble or the IRS is like, hey, this is incorrect, they actually have to they have to help you. Like they're not like, oh, you're on your own. Like they actually need to help you. So do your research, find a crypto tax attorney or find a crypto CPA or whatnot that's local to you. I want to say that there's some that are in different states that they can kind of help you. If you guys have any questions, please reach out to me, because I do have a large network of crypto attorneys and crypto tax professionals. But make sure you guys are reporting everything, because the US government, they don't play games. Like they will come find you. Like I know there's a meme that with that guy from that Taken movie, he's like, I will come find you, whatever. The SEC and the IRS and Congress and all these government entities, like if you do something that's kind of fishy, they will come find you and they will make an example out of you.
Do you have anyone you want to give a shout out to, like a specific attorney or tax person? If not, no worries.
My attorney is Peter Hazy-Petros. He deals with all my crypto, like legal stuff for me. I want to say he's based out in New York. He's absolutely amazing. I do follow him on Twitter, and I think I have him listed as a partner on my website. And then there's my tax accountant. I'm terrible, but I can't remember their name off the top of my head, but I should have them listed on my website. And they're all registered to do business legally in the United States. And they're all people that I recommend.
Well, I appreciate you coming on the show today. I appreciate you chatting with us a little bit about trading and all this good stuff.
Thanks for having me.
Thank you for having me on. I really appreciate it.
All right, guys, that was a really fun episode. I want to thank Wendy O and I want to thank Bagsy both for their time for coming on the show today. We had a really good discussion, and I really enjoy the points that they made, specifically around the different styles of trading. You know, I think that people need to learn, especially people coming into crypto, need to learn a little bit about how can you be a better trader by following your specific style and what fits you best. Most people don't follow what fits them best. They follow what the trend is. So if you're not a trader and you want to hold. If you're not a day trader and you want to make swing trades, do that. I think that that's really the best piece of advice that came out of this podcast. Again, we're not financial advisors. We're just creating educational and entertainment content only. And in the do your own research section of the What is Crypto podcast today, I want you to learn what your trading style is. And the way that you're going to be able to do that is by studying the different styles and choosing one that fits your schedule the best, that fits your lifestyle the best, and that fits your mentality the best. You are the only person that can know you to a very high degree. So first step is, if you don't know yourself well enough, start to learn yourself a little bit better before you get into spending a lot of money on trading. All right, guys, that's it for the podcast, and I'll catch you in the next episode. Peace.